So we have some massive moves coming to Tesla stock that could create some great buying opportunities and thus also create generational wealth. However, in this video, I want to highlight a couple of things that really paint a vivid image of where we currently are in the markets. So we're in an interesting area where we have individuals pointing out that the massive rally in tech recently has just been a relief rally, and in fact we're heading to an area of complacency right before we start heading to an area of anxiety and capitulation and a massive drop. However, on the other end of the spectrum, we have individuals saying that the Nasdaq is about to rally like it hasn't done so since 1983. Now, the problem with individuals showing you a chart and looking at historical price action is that it's a very limited view, right? It's very myopic. And the reason I say this is because they're really just looking at one data point, which is technical analysis, and just looking at, historic prices and saying, hey, based on this should happen, right? And we all know that the markets are much more dynamic than just looking at, some numbers on the chart and saying, hey, this is a pattern here and, this is possibly going to happen. Now, I'm not trying to discredit technical analysis. I use technical analysis myself. However, one of the things that we absolutely have to really pay attention to is all the other several data points that, a lot of individuals fail to actually look at, right? And so in this video, I want to cover a few things that are really interesting that really pertains to the picture of what could possibly happen with Tesla and where the buying opportunity lies. Now, one of the first topics I want to go ahead and cover is the topic of liquidity. Now, this is something I covered with the Push and Profit private group a multitude of different times recently. However, I want to go ahead and cover this publicly on YouTube. So what has happened recently? Well, we've had, the optimistic news with a deal closing in on the debt ceiling, which is great. Markets rallied from Friday till Tuesday, and this is all great. However, what happens immediately after we have a debt ceiling deal completed? Well, guess what? The Treasury has to go ahead and raise debt to meet its financial obligations. And so what do they do to raise debt? Well, they issue, Treasury bills, Treasury notes, Treasury bonds. And so investors obviously buy this. And so what is potentially going to happen in the next couple of weeks is we're going to see this massive exodus of money and capital leaving from the equities market, right? So we're going to see a lot of money leaving from the stock market and heading into these treasuries. So what does this create? Well, this creates the issue of liquidity, right? When there's less liquidity, right, and there's money being taken out of the market, well, that creates volatility. And so this could create some downward pressure in the market, right? And that's something that we really want to be aware of, right? We can't just pay attention to, the price action on the charts. We have to be aware of what's going on in the economy, right? And so this is something that's huge, and we want to pay attention to it because we really want to see what could happen in the next couple of weeks, because this could either mean that stocks are going to rally up, or most likely they're going to go ahead and go down. Now, does this mean a crash is happening? Not necessarily. However, potential buying opportunities may be presented, and we want to be aware of that. But along with the topic of liquidity, we have to talk about the topic of the total debt balance. And so one of the things I want to highlight here is that debt in all areas is increasing. However, I really want to hone in and just put a magnifying glass over here for this area where credit cards, where we're seeing that credit card debt is reaching a total of $17 trillion. Now, this paints a very vivid picture because obviously if consumers are having to leverage debt in order to meet their daily purchases, well, this paints a very negative perspective of what's going on with the broader economy. And obviously, as I said earlier in the beginning of the video, we want to pay attention to several different data points and look just beyond the charts and numbers of the historical prices and actually really form a better hypothesis when we were looking at everything put together. Now, adding on to total debt, another major concern is that due to the debt ceiling deal coming into play, we're going to have millions of Americans having to go back to paying their federal student loan payments by the end of the summer. And now it's estimated that about 45 million Americans owe about $1.6 trillion on these loans, and the average loan payment is around $400 that millions of Americans are going to have to pay monthly now. And so what all of this means is that there is a lot of stress on the consumer, and in just a couple of months, there's going to be a lot more stress on consumers added along with the fact that there's going to be less liquidity in the market. So we're going to see a lot of movements happening. looming, right? Now I want to go ahead and talk about Tesla specifically and look at the price action for Tesla. Now when we're looking at Tesla from a weekly time frame, one of the things I mentioned a multitude of different times on this channel is that there is a lot of volume by price in this area, which is different from traditional volume by time, right? And so when there's a lot of volume by price, that means at this certain price level, there are a bunch of transactions between the bid and the ask. And so this creates, areas of consolidation. This creates, supports and resistances. And so we're currently entering close to this area of resistance. In fact, we're actually kind of rejecting off this resistance. Now, this isn't to say that Tesla can't break above 216, in the next couple of trading sessions. No, of course, the stock market's more dynamic and we could have more catalyst events that could push Tesla stock above this. However, when we're just looking at things from a technical aspect, well, it's more likely that Tesla may reject around the $216 area and come back down, adding along with all the other negative catalyst events that I recently said in the beginning of this video so far. However, we may see Tesla have a few more green trading sessions before we actually see Tesla get rejected and start trading downwards. Not that it's entirely going to have to happen, but this is probably what's going to happen. Now, I do want to let you guys know my game plan, right? So I have exposure to Tesla in both my long-term portfolio, but I also trade Tesla in the short term. And the reason I often say this is because I'm very optimistic and bullish on Tesla for the long term. And in fact, even if Tesla's falling down in the short term due to, the economic climate and also looking at the technicals and looking at the charts and just mashing everything together, even if things fall down for Tesla in the short term, I'm not really too worried because what I'm going to be doing for my long-term portfolio is simply just dollar cost averaging and actually just picking up more shares of Tesla after we see a major decline and seeing a bounce with validation or confirmation that things are going back upwards, right? Because obviously generational wealth is something that you have to be patient for. It's not going to happen overnight, although we do like those rocket moments where stocks go up. I think we have to be patient for these opportunities to come. And so that's what I'm doing for Tesla in my long-term portfolio. I'm just patiently waiting on the sidelines. Now in my short-term trading account, I'm probably going to trade Tesla going downwards if it does get rejected. However, we could possibly see a different, complete story actually take place where we actually may see the Fed's pause rates, right? Because that's another catalyst event that's right around the corner where we're going to have the federal rate decision, right? Decide on whether they're going to hike rates or if they're going to pause rates or what's going to happen. And so the market's already pricing in that the Feds are going to hike rates. And so if the Feds actually pause rates, well, that could actually be the catalyst that takes Tesla along with a lot of other tech stocks out of this range and actually continue going upwards, right? And so, that's something that we really want to be patient for. And so as a short-term trader, I'm going to be patient for the data to come out, but also from a perspective of a long-term investor, I'm also going to be patient to see what actually happens as well. So hopefully this does clear up your thoughts on what's happening with the overall markets. Definitely encourage you guys to be patient. And I also want to let you guys know that if you have not done so already, consider subscribing to the channel as it definitely helps out. And also make sure to check out the links in the description below because the first link is going to be a link for the Push and Profit private group where you have access to my daily briefings where every single day I talk about what stocks I'm looking to trade and the reason why, along with also market summaries and, just talking about what's going on in the overall market and what trends I'm seeing. But with that being said, guys, hopefully you enjoyed this video. Make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.